Go. All right. So today we're working to learn about the 203K, the FHA or Federal Housing Administration 203K renovation program. And this program is designed to help you purchase a home and add in the cost of fixing up the property or adding in the cost of repairs. Okay, so question, first thing, what have people heard about renovation loans? Has anybody in the audience heard anything about renovation loans?
A little bit.
A little bit. And do you know, I mean, what have you heard, the little bit that you've heard? Is it, what have you heard?
That it's a long process.
It's a long process. Okay, good. So yes, it is a long process. That's what most people, that's their first concern. How long is it going to take? And typically these loans will take 45 days to 60 days, depending on the type of loan it is. If it's a streamline, they can be done as little as 30 days. So it can be, and it is a little bit more complicated than a typical purchase loan. But I believe that if we set it up right, it can be done a lot quicker and a lot more efficiently. So what are the loans used for? Well, renovation loans they're available to income borrowers of basically all levels. And it is an FHA loan or Federal Housing Administration loan. So this type of loan is going to follow whatever the FHA rules are. This particular one I'm talking about. There are other renovation loans, but the one we're going to talk about now is just basically having to do with the Federal Housing
So the
Administration.
same down payment, correct?
With the same down payment of 3.5%. Okay, so this is for where borrowers want to make changes. Renovation loans are not for blighted properties or completely destroyed properties, and there's no restriction on income limits. And they are available pretty much everywhere, and they're really not all that complicated. I think the hardest part is really understanding the initial part and getting the contractor's bids. So a couple of highlights here. Let's see. So fixer-uppers, you usually think of in this program, just in general terms, is more for the fixer-upper where you're not structurally changing the property. So where you're not blowing out walls or adding on additions or anything like that. That's another program. So this one we're talking about tonight is just called the Streamline or the Limited program. And typically the repairs are going to be $35,000 or less. Okay, so
Does it matter what kind of repairs?
that is covered here. I'll give you a list of the type of repairs. So typically, you would want to think of this program as I think of it as maybe a home that's just needs to be spruced up. Maybe it's an older home, and I think we find cases where maybe there's an elderly couple and they've moved out, and the family has this property, and it's got carpet from the '60s, and the kitchen, and it's got wood paneling, and it's something that really needs to be spruced up, and it's not going to take a lot of major expense to do that. So that's the typical one on this type of streamline. And again, it's going to be for $35,000 or less. Okay, so let's see here. So there's two kinds of loan. The standard, and the standard on my list here on my slide, that standard is one where you're doing the major renovations. So this may be completely gutting it and remodeling it, adding on a new bedroom, adding on a garage as well. So these are really much more comprehensive, and those are the ones that are going to tend to last a little bit longer. They're going to take a little bit longer to do. The last one we just did took about 72 days from start to finish. But this particular property he purchased for $30,000, and he ended up putting over $120,000 into the loan for the total. So it was a big project. So what are the benefits? The buyers can benefit from this program because instead of trying to buy a property and then taking the money out of pocket to later on try to fix the property up, they can do it all right away. Oh, we have another addition to our class. Welcome, yay! We're live here, so we're recording. We're broadcasting to the world. So we were just starting with some of the benefits of this 203K program. It's going to help build equity. It's going to increase the property value. I think the main benefit of this type of loan program is that you don't have to think about getting two loans at once. You can just get one loan. You can build in all the things that you want to do to improve the property at closing. The loan can be closed, and then the renovations can begin. So it's a tremendous benefit. especially for those who are they're looking at a home and they're just like, well, I don't know, this property needs so much work. And this way they can buy the property, pick out the things that they want. The seller doesn't have to worry about it. They can close and then the contractors can go to work and get the property fixed. So why use my company? Why use the mortgage company of Southern Indiana? Well, I think we do these well, and I think since we're an independent broker, we have multiple resources. So we have several different companies that we work with, especially on a national basis, that really do these loan types well. This is a highly specialized loan, and usually in small communities, small town America, the local banks and credit unions don't even want to engage in something like this because it is a rather complicated loan. So that's the benefit of working with a broker, that you get the opportunity to, we're working with national lenders on these that have specialized departments. That's all they do day in and day out. Okay, so the 203K, and we're talking about the limited program. And again, it's going to be a standard FHA type of loan. FHA is Federal Housing Administration. And the cash investment, as we talked about before, is 3.5%. All the other rules apply as well in terms of credit and debt to income ratios and all the other things that sometimes sellers will pay for, closing costs and prepaids on behalf of the buyer. All of those are all the same. All the same rules apply. The transaction types, you can actually do a purchase or a refinance. So this is a benefit if someone doesn't want to move, maybe they just want to fix their home. We can help them rehabilitate their home, and then maybe they want to do that and then maybe sell it in the future. They're just not ready to go, but that would be an option for them to get their home ready. That maybe they want to sell in a year or two. Maybe they're relocating, but not right away. That is an option. And again, renovation amount $35,000 can be rolled into. So this is the streamline or limited 203K. The type of renovations are typically going to be minor. Non-structural is really the key here. That we're not altering, we're not changing walls, we're not blowing walls out. HVAC systems, and typically things that need to be completed in 6 months or less. HUD consultant. HUD means Housing and Urban Development, and so on the full K, or the long drawn out 203K, we call that a full K. That's when we need a HUD consultant, because these projects tend to be very comprehensive. So we need to hire this HUD consultant to make sure that all of the plans and specifications for a complete remodel. And that's not what we're talking about tonight, but I did want to point out that these programs don't need that HUD consultant, so we can get the loans done a lot faster. And in this case, and in most cases, we're only going to want one contractor, and we can disperse on a streamline 50% of the initial disbursement at closing. So the contractor can already, as soon as the loan closes, they can go ahead and go to work and get some money in the bank to go buy all the things that they need. Loan type, 30-year fixed rate only, minimum FICO 640. I do have some lenders that can do a little bit lower than that, but 640 is usually where we need to be on this particular loan type. So there, the different property types here. Normally what we're going to see here is the regular old detached single family residence. That's what SFR means. And normally the one unit, we can do the 2 to 4 units like duplexes and so forth with this property. But what we see here normally is the regular property, single family home. It's also available for manufactured homes as well. Okay, so allowed improvements. This is one of the big questions, is what can we do with this? And again, going back to the limited program has a $35,000 cap, and we're really thinking more of cosmetic things to spruce up a property. And again, it says here repairs or improvements that are expected to be done in 6 months or less. And typically what we're going to do is make 2 contractor payments. So we're going to do one at the beginning. We're going to give them their initial draw, if you would. And then we're going to do, whenever everything's done, the appraiser in this case is going to make sure everything's done. And then they'll do the final, after the final inspection is done, then they'll get the final draw and the contractor will be paid. Let's see what else is of interest here. In this case, we want to make sure that the repairs are not, they're not going to hold the borrower from occupying the property right away more than 15 days. Okay, here's another one, allowable improvements, eligible and ineligible. Typical things here, eliminating health and safety problems, repairing or replacing wells and septic systems, connecting to public water, sewer, repairing plumbing, electrical, heating and air, those type of things, making changes for improved function and modernization. So um, anything minor that is not going to be involved in moving or altering this structure, repairing and allowing or replacing roofs and siding and gutters. So you think about a property maybe that's been just neglected over the years. Maybe it's a foreclosure. Again, maybe it's a property that was owned by elderly couple and they had to move on, and the family has the property and they don't know what to do with their parents' house and they don't have the money or don't want to put the money into it. That would be a very typical property. Foreclosures as well. Some foreclosures are too far gone. They need a full K, but it just depends on where they're at in that foreclosure process. So it's another opportunity for borrowers to be able to, with a low down payment, a low cash investment, to get a loan, fix up all the things that they want to fix up, and then get that property off the market and get it sold because the seller may not have the availability to put the money into it. So some things we don't want to do with this program is converting a one family to a two family, splitting things up. We want to leave the integrity of the property. A structure that's been demolished already, so it's something that there's basically just like something that got wiped out by a tornado. We don't want to reconstruct a whole one. It's more of something that's already an existing structure. And again, structural alterations is not eligible on the streamline. That's full K, and that's a whole nother class. So who determines what improvements will be done? A lot of this is up to the borrower. So the borrower is going to go pick the people that they want, and there's we don't mandate who actually does the work. There has to be some cost estimates done and a work plan put together. And we recommend that they get a couple of different contractors because they're going to have to deal with the contractor after they're going to be the ones hiring these people. So they want to make sure that they get good contractors. And we typically only want one contractor. So if you have a situation to where you need 2 or 3 specialized, they want one main contractor that's going to handle all of the funds and distribute everything. There is some contingency reserves. That means that, you get into these projects and sometimes there's a little more expense. And in this case, there's a 10% contingency. So they look at the total, whatever the project's going to be, and add that contingency in there just in case. Any money, if there's anything left over, it typically goes back on the principal of the loan and the borrowers don't get it. So it's important to know. Back to the disbursements. The disbursements, 50% can be drawn on this right away. And I think that's a big benefit too when you have a short time window and you're looking around at contractors. That's a benefit to them so they can get started right away. Okay, what do we got here? My slide has a couple of duplicates here. I tried to eliminate that earlier, but I think it's there for a purpose that this is a little more technical. The older properties, if they have lead-based paint, they're going to need some. We're going to need to have a contractor that's certified in that lead-based paint if it becomes an issue. In most states, contractors have to be licensed, and in the state of Indiana, there usually is not. There's some type of registration process, so we're going to want to go through and make sure that the contractors are vetted. So our folks will check to make sure that they're a good contractor, and the borrower does select the contractor. And let's see what else. Another thing that's important here is that the borrowers can't do the work themselves. And that stands to reason because sometimes the work doesn't get done because other things happen. So we want to make sure that the homes get done. And multiple estimates are very, very important. Okay, so project completion, once everything is done, there is a final draw that's requested and a final inspection is ordered. And then the final payment is made to the contractor. So it's actually can be a very, very simple process that can be done in a very timely manner. I think the key to this whole loan program and making it successful is doing all the planning up front and having a good level of education on the front. So there it is. That's me. And I'm Darren Patterson, the mortgage company of Southern Indiana. And be glad to answer any questions at this point. Owen phone number 812-482-3100, and cell phone, which is not on here, but it's 812-631-2352. So now I'm ready for questions.